Global markets set to close early in thin trade ahead of Christmas break. And report shows South Africa is leading the FX industry in Africa. And giant solar park in the desert jumpstarts Egypt's renewable push. Hello and welcome, and thank you for joining us on Business Incorporated. I'm Chimezie Obi Iwa. We get the show started now with the markets, and it was a mixed bag of numbers coming from the African stock markets at intraday on Christmas Eve. The Nigerian All-Share Index was down 0.16% at about midday. In South Africa, the JSE Index was 0.27% positive. The market in Egypt was 0.78% lower at intraday, while the Kenyan Index closed in the green on Monday. And all major Gulf markets were in the red at intraday, dampened mainly by financials, while petrochemical shares weighed on Saudi Arabia. The Saudi benchmark index was down 0.22% as Samba Financial Group lost 2.2%, while Saudi Arabian Mining Corporation dipped 1.4%. The kingdom's oil giant Saudi Aramco dropped 0.3% to 35.5 riyals. The state-owned firm took a breather in the previous session to snap 4 straight days of losses. The Qatari index slipped to 0.81%, with Qatari Islamic Bank and Qatar Commercial Bank declining 0.6% and 1.1%. Dubai's index was down 0.18%, hurt by a decline in banking shares, with Mashreq Bank dropping 7.8%. In Abu Dhabi, the index inched down 0.56% as Abu Dhabi National Energy Company dropped 8%, its third straight day of decline. And in Europe, stocks opened slightly lower today in a shortened trading session due to the Christmas holidays. The Pan-European Stoxx 600 hovered near the flat line, with all major bourses in negative territory. In terms of individual stock sectors, the performance was generally flat across the board, with oil and gas sector at the top of the table, up 0.2%. Market focus is largely attuned to developments on the U.S.-China trade front. Investors cheered the news that China will cut import tariffs on a wide range of goods. China's Finance Ministry announced starting January 1, it will lower import tariffs on over 850 products ranging from frozen porks to some types of semiconductors. In the UK, trading is also subdued as many financial markets close early for the Christmas holidays. The UK FTSE 100 closes about 12:30 p.m. London time, with other European markets shortly afterwards. In Asia, stocks were mixed on Tuesday, with Hong Kong and Australia's market closing earlier ahead of the Christmas holiday on Wednesday. Mainland Chinese stocks were higher by their close following their Monday fall. The Shanghai Composite added 0.67% to about 2,982.68, while the Shenzhen Composite also rose 1.381% to approximately 1,690.74. Hong Kong's Hang Seng Index declined 0.15% to close early at 27,864.21. The Nikkei 225 in Japan was fractionally higher to close at 23,830.58, while the Topix Index inched slightly lower to end its trading day at 1,728.22. In South Korea, the Kospi slipped 0.62% to close at 2,190 points. Meanwhile, shares in Australia had an early close for Christmas Eve, with S&P ASX 200 up 0.13%. In the U.S., stock index futures pointed to a slightly higher start on Tuesday, building on gains which took markets to fresh record highs in the previous session. At about 2 a.m. Eastern Time, Dow futures were up 11 points, pointing to a higher open of more than 8 points. Futures on the S&P and Nasdaq were higher too. Trading is expected to be subdued on Tuesday, as many financial markets will close early for the Christmas holidays. On Monday, the 3 major averages all posted record closes. Market focus is largely attuned to developments on the U.S.-China trade front. Investors cheered the news that China will cut import tariffs on a wide range of goods. On the data front, Philadelphia Fed manufacturing surveys are due at 8:30 a.m. Eastern Time, followed by Richmond Fed surveys at 10 a.m. Eastern Time. The U.S. stock market closes at 1 p.m. Eastern Time on Tuesday for Christmas Eve and is closed on Wednesday for Christmas. Thursday and Friday are regular trading days. And to metals market, gold prices rose to their highest in a month and a half today as soft economic data out of the United States and concerns about an interim Sino-U.S. trade deal lent support to the safe haven bullion. Spot gold rose 0.3% to $1,488.99 per ounce in early trade. Prices hit their highest since November 7 at $1,489. Gold futures also edged up 0.3% to $1,492. In other metals, silver rose 0.7% to $17.54 per ounce after scaling its highest since November 7 at $17.57 earlier in the session. Palladium was down 0.1% to $1,874, while platinum was flat at $935. And oil prices edged higher today in thin pre-Christmas trading after Russia's energy minister said cooperation with OPEC to support the market will continue, and as analysts forecast a second weekly decline in U.S. crude inventories. Brent crude was up 5 cents at $66.44 a barrel in early trade. U.S. West Texas Intermediate was 1 cent higher at $60.53 a barrel. OPEC and other producers agreed in November to extend and deepen output curbs in place since 2017. The reduction of output could see as much as 2.1 million barrels per day taken off the market, or about 2% of global demand.